So like I said, this video is going to be about stocks that you guys should be paying attention to, or stocks that I believe are bullish. So without further ado, man, let's go ahead and get straight into it. We'll be covering long-term stocks, stocks that I think sleepers, et cetera, et cetera. First stock that I'm considering the long-term stock is Walgreens. Why? First of all, if you look around, Walgreens have replaced a lot of what Rite Aids, even CVS's. So again, like I said, if you're looking trying to figure out what stocks to invest into, you want to pay attention to what's going on around you. There's a lot of Walgreens that have been replacing CVS's, Rite Aids, etc. As you can see right now, it's at $37. The 52-week high is $64. I would assume that was before coronavirus. As you can see, the analysts believe it's a 5% buy. But me, again, if you just pay attention, this is a long-term investment. Walgreens at $37. Pretty good bargain, about half of the 52-week high. The second one, I mentioned this one earlier. If you're following me on IG, AMC Entertainment, as the theaters start to open up, you can expect this price to continue to increase. As you can see, there's a slight increase as in the last couple months. The 52-week high for this stock is $12 right now, and it's at almost $7. Let's see. Look at the news. It says stocks making the biggest moves midday. And they have it at a 0% buy, which is actually, don't get discouraged. It's actually good. You want to be aggressive when everybody else, is timid, when they don't want to buy. That's when you want to buy. And at $7, you cannot beat this, because we all know that once, the economy starts to open back up, entertainment is going to start to, increase again in value. Next, oh yeah, Cinemark. It's another entertainment movie theater as well. As you can see, it's at $16. The 52-week high was way more expensive than AMC. The value was way more than AMC, should I say. And they have it at a 50% buy. AMC, $7. Cinemark. So you see that AMC is more cheaper than, Cinemark. So you can buy way more stocks and make more money once, the stocks start to increase. The next stock that I believe is long-term, of course, is American Airlines. Any of the airlines, but this is the cheapest one right now. American Airlines is the stock you want to invest into, because, again, once the economy starts to open up, everybody, trust me, everybody's tired of being in the house. Everybody's going to be traveling, ready to travel. I'm pretty sure a lot of people have trips that are booked. Trust me, we're ready to get out of the house. So, again, any other airlines, like I said, if you go back, look, let's see, a month, yeah. So you can see how the prices changed. The 52-week high is $31. Right now, it's at $13. They have a 20% buy, which isn't bad. So that means they do believe they thinking like I'm thinking. It says that once the economy starts to open back up, that people will start to travel. I mean, that's common sense, of course. So of course they have some hope, just like I do, at the 20% buy. You look at United Airlines again. It's more expensive than American, but as you can see, the 52-week high is way more than American Airlines at $95. So there is a chance you can make more money with this stock, but it costs more. So I would go with American Airlines, because it's the cheapest one. You can buy more stocks, and essentially you will make more money once the stock starts to increase in value. Yep. So the next one, again, remember I mentioned what was that I mentioned? I mentioned to you guys Zoom. This is another software app, Slack. As you can see, it's only at $33, but if you were paying attention, it's been increasing ever since the coronavirus, hit. Slack technology develops and publishes real-time collaboration applications and platforms. It provides engineering, sales, marketing, IT, project management, and human resource solutions. So again, this is another software app similar to Zoom, but Zoom is a face-to-face video. That's the only difference. But again, anything related to software right now is on the rise. Like, they have it at a 50% buy. It was worth 40, 52-week high. And as you can see, look at the incline. it's been making money ever since the coronavirus really hit. This is another one I'm really, really, really bullish about. I love the price at 30 something dollars. So again, that's one that I'm pretty much counting on that one. The next thing we are going to look at, these are more expensive, but I believe these will be good investments. As you can see, 5 and below, look at the incline since the coronavirus hit. Even since the coronavirus, the price is inclined. So the prices continue to increase. You see the 52-week high at $137. Right now it's at 125. And look, they have it at a 71% buy. Wow. So yeah, 5 and below is another one. Again, it is close to the 52-week high. So I mean, you can buy a stock, you can do fractional shares. It wouldn't hurt. But 5 and below, again, that's like Walgreens. They are everywhere. The next one, this one is the one that everybody has. Come on, Apple was $500 before the 4-to-1 ratio split. As you can see, it's slightly increased since they split the stocks into a 4-to-1 ratio. Again, Apple is not going to be at 500 within a month or 2 months. The only thing with Apple is that even though it is technically software, I mean, the economy still kind of shut down. So, that's the only thing that I don't like about Apple. But for sure, in due time, we all know that Apple's going to make money. So it's a very good investment at $132. This is another one that I mentioned on my Instagram. Peloton, look at the increase since the coronavirus. Just look. You got to jump on this one. You have to jump on this one ASAP before you miss the hype. Got to jump on it. Peloton Interactive operates at-home fitness platform for live and on-demand indoor cycling classes. The company pioneered connected technology-enabled fitness and the streaming of immersive instructor-led boutique classes, etc., etc. So again, this is perfect for the coronavirus. You have at-home cycling classes. Everybody's trying to get in shape, and you get to do this at home. You gotta check out Peloton, man. Just look at the way it's been increasing since the coronavirus. And this is devil's advocate. This is the bully of the market, Tesla. Man, I am a little scared about this stock here because it's been so bullish that we all know that, all good things come to an end. But the thing is, it's been unstoppable. So at the bare minimum, invest a fractional share into this, please. Do not be like me and miss out. This stock was at $2,000 before the 5-to-1 ratio, before the 4-to-1 ratio split. $2,000. It's at $437 at the least, guys. Fractional share. If you can't afford one share, fractional share. Again, fractional shares add up. Don't be afraid to put a half 50% in. It adds up. Again, now these next ones are the longer term investments. Cruises. I think it will be a while before the cruise lines start to make money. Again, it's all dependent on the coronavirus. But you see that they have it at a 75% hold, which means they still believe that the cruiser will make money. They're not telling you to sell it. They're telling you to hold on to them because they know when the economy opens back up, that the cruise line will start to gradually make money. It's not just going to skyrocket back to their original prices. But if you see the price of Carnival Cruise, you see the prices that these cruises were at before the coronavirus. It's a you can't lose on the situation. They're cheap. Buy a couple of them or invest in the one. These next few ones are my sleepers. Smile Direct. I know a lot of you know what Smile Direct is. It's basically they offer dental services. Smile Direct has been increasing as well over the last month or so. It's again cheap, $10. You can't lose. It's only $10. What's the most you can lose? $10. You buy a couple, it goes up $13. It's simple math, man. You can't lose on a $10 share. Again, I know you guys see this one a lot on my Instagram. Utz potato chips or Utz brand. They have just went public a couple days ago. That's is why I'm bullish on this one. Well, I won't say that I'm bullish on them. It's new to the stock market. It's only a couple days old. So with that being said, it's still finding its way, but this may be a long-term investment as well, but it's worth the investment at $16, guys. They just began trading publicly. So it's at 16 right now. Who knows what may happen, man. It's 16 bucks. You can't beat it. What's next? Macy's is a sleeper, and I'm also gonna mention Macy's later on as well. But $7. Come on, man. Right under $7. Macy's. It was trading at $18, 52-week high. The reason that I have this on here as a sleeper is because the holidays are coming up. God, remember I said pay attention to what's going on in the world. The holidays are coming up. Macy's will increase, and again at $6.92. It's dirt cheap. Dirt cheap. And you see how it's been doing over the past 3 months, or where it was at. Look, it was at $16 before coronavirus hit. Dropped down to $5, $6. And you can see it's gradually, starting to increase. But trust me, when the holidays start to kick in, remember I told you so. So don't DM me or mess me and say, oh, Macy's is up to $15, or come on, man, we gotta take advantage of these opportunities. Macy's is only $6. You can't lose. Okay, next we are the next category that if you guys are looking for other stocks to invest into, this next category, just look at the increase. Look at the incline on this. Look how steep it is. E-commerce, Carvana, Shopify, any softwares. Just look. If you guys don't know what Carvana is, Carvana, they basically deliver a car to you, your front door, online. E-commerce is just electronical sales. That's all e-commerce is. And during this coronavirus, this is perfect. Shopify, again, like I mentioned, look at the incline. Look how steep it is. But look at that before before the coronavirus, 300 and something dollars. It is now $1,074. Come on, guys. So again, this one might be a little bit too expensive for you, but again, fractional shares, or you find a similar product, you find a similar company, like Shopify. Again, like I said, Carvana. There are a lot of ones. If you just go to you put in e-commerce or software, these will pop up. Again, Zoom is you can find it under software. Zoom is at 418 right now. Remember, I posted a video on Instagram about how frustrated I was because I knew that the school year was about to start. Now this new Zoom the price was going to increase. This is another related stock, CrowdStrike. I invested into this one as well. Again, this is software. Right now, software, e-commerce, what else? When the economy starts to open back, entertainment. Look at that, Adobe. Just look at the incline on the software apps, on the e-commerce app, software and e-commerce. Just look at the incline. Look how steep they are. They are making a lot of money during this quarantine. So if you could find any related stocks that are even cheaper, I would, buy a couple. Next, we are going to go to apparel and accessories. Guess, believe it or not, people are still buying. They're still buying apparel, accessories online. Guess you could look where we're selling that before the coronavirus, and right now it's slightly starting to increase. Again, like I said, Macy's. You got Nike. Look at Nike. Nike's actually been performing pretty well, even during the quarantine. As you can see, it's actually performing very well. So I would definitely invest in a Nike. Now this one, when I was going through this app, this one surprised me. Lululemon, and this is during quarantine. This is during quarantine, and you see it's at a 61% buy. Look, I had to add it to my watch list. Wow, look at this. $176 in March, 144. Now it's almost at $400. And I know you females, y'all know about more about Lululemon than us males do, but this one I had to add to the watch list. Again, apparel and accessories. That's another category you can check out. And the last one I said, yeah, entertainment. Six Flags. Again, this is all dependent on when the economy, starts to reopen. But look, do we wait until the economy starts to reopen and the price increases? No, we invest now, or we wait till the price drops down a little bit more. Then we start to invest. Then we profit when the economy starts to reopen. Dave and Buster's, another one at $7 when the coronavirus hit. It's at 18 now. Again, you can see it's gradually increasing. You can see it was at $45 before the coronavirus hit. Again, these stocks are all dependent on when the economy starts to reopen. But again, they're cheap right now, so we invest now, and then we profit. Another category, gyms. They're starting to reopen. Look at Planet Fitness. It was down in March when the coronavirus hit, and you can see it's gradually increases. It's actually almost back to close to where it was before the coronavirus. It was at 87, pre-coronavirus. Now it's at 62, so it's not too far off. But again, that's because a lot of states have reopened and they allowed individuals to use gyms. So again, this is not rocket science. It's not complicated. It's actually, I won't say it's real simple, but it's just common sense, guys. The economy started to open up. They allow people to use gyms. You see the happens to the price. Look, it started to go up. But how do you make money? You first of all, we're attentive, and we're investing before the price goes up. When we hear the news that they're starting to reopen, you see a lot of people working out. Okay, we want to invest in the gym. We want to invest in the Planet Fitness. We know a lot of people are at home doing school. We want to invest in the software apps. We want to invest into e-commerce because we know we can't go outside. But that's all I got.